1 2 1 2 1 2 1 2 1 2 1 2 1 2 1 2 1 2 Cody 1 2 1 2 1 2 Green 1 2 1 2 1 Can I ask you to stand up?
Microphone check, 1 2 1 2. Okay, everybody, welcome to the Launch Accelerator. This is week number 6 or 7? Week 7. We are an accelerator for those of you who are here for the first time. Not an incubator. We used to call it the incubator. Now it's called the accelerator because the companies we accept have product market fit and some level of traction. That traction is usually in the, let's call it, low thousands to tens of thousands of dollars per month in revenue, or once in a while we'll accept somebody we know who has got an amazing technology background or consumer adoption and is pre-revenue, but they have great consumer adoption. But in this case, the 7 companies you'll see today all have revenue and real products, so that's delightful. We did 4 classes this year. Next year we'll do 7 companies per class, and we try to make it super efficient for the judges in the front row. They'll have 3 minutes to pitch. That's essentially a trailer. It's not intended to be the full pitch. Like a trailer of a movie, it doesn't include the entire movie. So there'll be many questions that you will have after seeing the trailer. So we don't need a bunch of advice on the trailer and what's not included in it, because the answer to that is most of the pitch. What we're looking for from the judges in the front is a great question about the business itself or the founder or the market, something about the business. Obviously, they're going to leave a lot of things out of the presentation. And the trailer is designed to get you to take a meeting with these companies if you're so inclined. They'll have 3 minutes to pitch. Then we'll have the judges ask their questions as a group. When we get to the first group of questions, I'll have you say your name, the name of your firm, and typical check size. When the first group of, you'll give all your questions in a row, and then they'll answer you as a group. So the judges might ask 4 or 5 questions, and then they'll write them down and answer as a group. That makes it go faster, and it makes it more difficult. So we like both of those things. 3 minutes on the clock. First up is Brent from Zup. We met Zup, I think you guys cold emailed us, or you applied? We applied. Okay, 3 minutes on the clock. And we practice no devices here, so if you have your device out, just please put it away. 3, 2, go. And 3, 2, go.
Hey everyone, my name is Brent Henderson. I am the founder and CEO of Zup. So a lot of you were investing back in the 2011 to 2014 range, back when the solo-mo craze was going on. And the reason there was so many investment dollars going into this is because investors knew that if somebody solved the local discovery problem, that would be a massive $30 to $50 billion business. And one of the commonalities between all these companies is that they focused on monetizing by charging the businesses. But something that they forgot to do or didn't pay as much attention to do is what does the end user actually want? By charging the businesses, they weren't able to really focus in on the value for the end user. And so what we started to think about was, what would a product look like where we actually charge the user? Could we actually focus on creating the best product and charging users to actually access that? So we created a mobile app called Zup, and Zup is a $4.99 monthly membership that rewards college students for going out with friends. We reward them through exclusive deals and member-only experiences at their favorite bars and restaurants around campus. So here's a screenshot of the app. So Danielle here has access to 47 exclusive rewards, so $10 off at Topgolf, a free combo at Bento for lunch. So if she heads over to Topgolf, she could pull up the reward, show it to a staff member. They'll tap to redeem that she is indeed a paying member, and she just saved $10 during that experience. Right now, we have over 5,900 paying members at our first university at UCF, so they're paying $5 a month. We're doing around $27,000, $28,000 a month in MRR. We actually just increased the price from $299 to $499 this past August and saw less than a 2% churn rate. One of the reasons that this has become so valuable is because, like I mentioned, these exclusive deals that they're getting. There are 55 local partners near UCF that are offering exclusive deals, including the Orlando Magic, Smoothie King, really anything that these students would be doing with friends. We provide them with those exclusive rewards. So that's 83% of the businesses around campus using our platform. We're also creating member-only experiences for them. So this is a picture of a scavenger hunt that we hosted. And the main purpose of these is to inspire people to interact with one another. So we're adding even more value beyond the existing offers and events and creating our own for them to add more value to the membership. We've got a $7 customer acquisition cost, a 4.7% voluntary monthly churn rate, $64 customer lifetime value, so a 9-to-1 LTV to CAC ratio. Our current model is the $4.99 a month membership, and we're taking but we certainly see this as something that's going to expand beyond college into the cities. It's really important to start at the college level because of the viral network effects that can happen and allow us to scale very quickly, but we certainly plan to expand this beyond the college market. And that'll be the $9.99 a month price point at that point in time. We're not taking any transaction fees right now. This is allowing us to have very little friction in onboarding all these businesses. But once we have really penetrated the market and scaled through cities, we'll be able to start taking transactions through the app. We're creating those experiences such as scavenger hunts and shows, but eventually we'll be able to create our own productions and events using our distribution channel. So my name is Brent Henderson, founder of Zup. We create experiences that bring people together. Thank you.
Okay, well done. In the incubator, accelerator, we ask everybody to track a metric week over week. What metric have you chosen to track, and how is it going?
Yep, so we are tracking monthly recurring revenue. So it started to dip a little bit there in November because of Thanksgiving and finals. So we took our gas pedal off of growth, and we'll continue to not experience much growth in December during winter break, but certainly have quite a few features and plans for accelerating growth in January once everyone gets back.
Questions from our esteemed and astute judges.
Hello? All right. Hey, everyone. My name's Connor Waddamel. I'm an investor at Bessemer Venture Partners, where I mainly focus on consumer small business software. Average check size, I think, it really varies. I think we, feel comfortable investing as small as a couple $100,000 all the way up to, several tens of millions of dollars in the later stages. I love this concept. I'm super impressed with the traction to date. Clearly, there's something happening. I think, one piece of skepticism that pops up is, college students are really, really hard demographic, and, more so than the typical consumer, they'll do the math and make sure they're getting their money's worth. So I'd be interested to hear kind of what's the value proposition and unit economics for a merchant on the platform, and how do you make sure that they don't get gutted over time as you get these, very money-conscious consumers that, might really take too much advantage of the rewards they're getting.
I'm Ben Narrison. I'm at NEA, New Enterprise Associates, a $20 billion committed capital fund, 40 years in. Current fund is $3.3 billion. Check size is actually anywhere from $1 million to $100 million. It's extraordinarily rare for us to do seed. In fact, about a year ago, we officially stopped doing it. I will make one seed investment over this last 15 months. It'll actually be into a launch company with Jason. So But having said that, the likelihood is most of my questions and advice is looking forward to the Series A. The two things I think about here, and I would be your customer back in the day, there was a book that came out, a coupon book, where you pay like $50 and you get all this great value, and you go out, and I actually used those, so not many people did, but they seem to stay in business. Two questions. Bespoke things like the treasure hunt would seem hard to scale over time. So how do you think about, as you go from one campus to 1,000 campuses, how you create activities locally that are bespoke in feeling, but that you don't have to have 1,000 people on the ground? And the second is, how do you think about monetizing the merchant? I get that you're getting paid by the consumer, $5 a month, but there's no reason you should give it away to the merchant if they're getting in front of, if there's 2 escape rooms in town, the one that pays you is probably the one you're going to promote. So how do you think about that?
All right, hey everybody, and thanks, Brent. That's great. My name's Yuri Engstrom. I represent a firm called Yes VC. We typically underwrite anywhere between a couple $100K up to $1.5 million initial checks. We'll do between 8 to 12 pre-seed or seed deals per year, and we're based here in San Francisco. I actually had mobile, local, social company that was acquired by Groupon, and then worked at Groupon when I was a founder, and so I'm familiar with the space. And my question to you is, at Groupon, I think the biggest challenge that Groupon had was retention of the customers, basically from the perspective of those businesses, basically getting somebody who visited a business once and maybe used a Groupon to buy something to then come back and hopefully pay full price. And so I would love to hear your strategy for getting those people to go back to the places they visit.
Hey everyone, my name is Asad Khalik. I'm an investor at Aspect Ventures, based here in the Bay. We are seed and Series A investors primarily. Check size anywhere from early 6 figures in our seed program to sort of 2 to 10-ish million in our Series A program, and that's coming out of a $200 million fund. I love the presentation. I mean, the idea at its core really appeals to me. I think the big question for me, and this is sort of a variant of what was proposed by a couple of the others here, is supply side acquisition and scaling. And I think, in particular, the early pilots obviously are in a more concentrated area, but how do you think about getting a critical mass of suppliers on board in larger regions and geos where that can be difficult or sometimes prohibitively expensive?
2 minutes on the clock. 3, 2, go.
Cool. I'm gonna go left to right. So Assad, supply side acquisition. We've got a dedicated partnership coordinator right now, and that's how we're acquiring merchants. It's very strategic that we're starting at the college level because it's only a 5 to 10 minute driving distance. So you're right, to do this at a citywide level is extremely challenging, and we don't think it's very smart to start at the citywide level. And that if somebody does, they're going to struggle a lot. But by scaling through college towns first, we'll be able to build up those economies of scale as well as the systems and procedures to do that. And the subscription model is also going to give us the monetization strategy to actually support a dedicated person on the ground, whereas other business models can't really support that type of structure. Giri, Groupon, I mean, you know this space very well after being acquired by Groupon, and that's a great question in regard to Groupon. How do you retain customers? Groupon's model was optimizing for the best deals possible and not for retention. We're keeping that very much in mind for the businesses. We've had 0% churn from businesses, and that's because we don't force them to offer outrageous deals. So it might be $2 off, buy one, get one free meals. They're always making money on it, and we're driving massive volume. So a lot of times we're shifting the money from being spent at the grocery store to being spent at the local economy. So all 3 parties are winning. The end consumer, the business, and our subscription model. Ben, scaling the activities, again, something that's going to support that is not only the subscription model and the money that we're generating to kind of guarantee that those events will be successful. We're eliminating the marketing expenses of creating those events, which significantly decreases the risk in hosting those. And monetizing the merchant, we've chosen not to yet, but there certainly will be ways that we can do that later on. We're just making sure right now that we're focusing on the end user and creating the best product. Connor, I'm sorry I didn't get to you, but I want to answer those afterwards, so thank you.
Okay, well done. Big round of applause for Zup. Next up is Tone Base. We are Very excited about subscription-based businesses at launch. Calm.com, Fitbod, Steezy, and now Tonebase. 3 minutes on the clock. Igor, are you ready?
Yes.
3, 2, go.
Hey everyone, my name is Igor, founder of Tonebase. So music is an integral part of our society. In fact, 37% of all Americans play a musical instrument. We believe that anyone can truly master how to play if they have access to the information of the best instructors and musicians in the world. Hence, we made it our mission to give everyone access to the knowledge of the best. Enter Tonebase. Let me show you how it works. Per our onboarding, we ask our users a few simple questions to determine their skill level and what they're interested in learning, based on which information we can serve them hundreds of highly curated video tutorials specifically catered to their needs. All within a beautiful platform specifically tailored to music education. On top of that, for an additional fee, our users can request private personalized video feedback from the master instructors themselves, monetary incentives for instructors, more revenue for us, and an in-depth learning experience for the consumer. Our roster of over 60 world-class musicians consists of Grammy Award winners and instructors and professors from such elite institutions like Juilliard School, Yale School of Music, and many more. We're a subscription service. We're charging $14.95 per month, $120 per year. We are currently at 750 paid users, 7,500 free users, and doing 6,800 monthly recurring revenue. On the engagement side, which is very encouraging, we're seeing a 38-minute average session time per premium user, and 78% of lessons are watched until the end. Our month-over-month churn rate is 8%. So currently, we're laser focused on our beachhead market, which is the classical guitar, because my co-founder Chris and I are both classically trained guitarists and teachers. So what's the opportunity here? In our beachhead market of classical guitar, there's an estimated 600,000 players worldwide. We have already 7,500 of them on our platform, and we're on track to 10xing this number by mid-2019. Now, if you consider all classical instruments, and this is only classical before we even go into like popular instruments and beyond, there's an estimated pool of 250 million players worldwide. And those are players, not beginners, players, people who are passionate about music. Many of them spend thousands of dollars on lessons, on instruments, and on supplemental materials. And 250 million people who do not have a resource where they can learn from the best. In the recent years, we've seen a number of verticalized subscription businesses that have been extremely successful. There's Strava for athletes, Tastement for foodies, Craftsy for makers, and many more. But there's nothing for 250 million passionate musicians who need a resource to access the knowledge from the best. Our team, combining musical and technical expertise, is the perfect fit to make this a reality. My name is Igor, we're Tonebase, and I'm looking forward for your questions. Thank you so much.
Okay, well done. And tell us, what metric are you tracking week over week?
Yeah, we're tracking monthly recurring revenue, and I'm currently at $6,766, and this is around 11% from last week.
Great. What do you attribute that growth to?
We're getting really very sophisticated at Facebook marketing, retargeting our user base, mainly to that, yeah.
Great. Well done. Let's take questions from our esteemed judges.
So really impressive progress. I think in particular the engagement figures around session time is really impressive. The question for me, I think, is attempts like this in the past, the key issue has been that people get demotivated if they're not as good as quickly as they think they might be, and you rapidly see a drop-off in retention. And so, given that you have a platform that's going to be more tech-enabled, would love to hear what you have up your sleeve to try and stop that and keep users engaged and reeled in, particularly if you are offering a monthly subscription where you might be more susceptible to that.
Hey Igor, this is Yuri from YesVC. Again, thanks. Looks exciting. As an investor in Musician, which is another one of these subscription-based music learning apps that's grown to very large scale, I can identify the opportunity here where Musician is really targets the very early beginners and kids, and this clearly is a little bit further up in their skill level, from what I understand. And we've looked at that market there through that company, and I think that's a real opportunity. I wasn't clear on how you're paying the instructors and then what kind of margins you end up with.
So music is something people are very passionate about. I am unfortunately not one of those people. But I have noticed over time, even at launch, that there's a lot of different versions of Let Me Help You Learn to play instrument X or Y or Z or write music. So I guess my core question would be, this landscape seems incredibly speckled with different variations of competitors. And so how do you distinguish yourself? If it is merely you can acquire intelligently and then retain, that's good, but you're going to be trapped in a money spending pattern that's less venture and more private equity style. So like what allows you to break out of the clutter of so many other forms of music education?
Yeah, I've been super impressed with the progress, and the product looks amazing. I think my main question would just be to learn a little bit more about how you chose the monetization strategy. It seems subscription for content right now. You also are connecting people who want lessons with people who can give them, and so another obvious seeming choice would be to monetize kind of lesson transaction volume, and so would be interested to hear whether you're experimenting or how you think about that.
Yeah, Connor, answering your question on monetization. So, our core product and our core revenue stream is subscriptions. Anything else we consider as upsell. The instructor would charge between $80 and $100 for an asynchronous video feedback. We take a 20% cut on that. The distinction to others, I'm not quite sure if I completely understood your question, but I think the distinction to what we see in the music education space is we have like single artists, musicians who don't have a large brand name to them, would create one-off classes, one-off online. So like I think the opportunity here is to bring a lot of extremely respected musicians in one place and create original content with them and retaining them. Yuri, how we're paying instructors? We pay them an upfront fee for each class, depending on the scale, depending on the length of the class, around $1,000. And we pay them, like I mentioned to Connor, they charge on the interactive feedback sessions. Later on, we do see this. We're doing this now for simplicity's sake. Later on, we do see a revenue share in order for this to be more scalable. But now for simplicities, it's just better to do that. I saw your question in terms of like a retention. You mentioned, yes, the drop off for beginners is enormous. It's true. Therefore, we strategically target people who are a little bit further advanced. A lot of like a third of our customers are people 55 plus, for instance, who've been playing hobbyists. They're playing all the time, and for them, they're already invested. And the way we go down market to really reach beginners, we partner with a lot of teachers who use our resource as an augmentation to the lessons. Thank you so much.
Okay, well done. Next up is Shoot My Travel. We'll put 3 minutes on the clock. In 3, 2.
Hello everyone, my name is Valerie. I'm the co-founder and CEO of Shoot My Travel. We all take photos while we travel. The problem is that we're never in the picture. And let's be honest, selfies suck. At Shoot My Travel, we are redefining the way you experience travel photography. How? By pairing travelers with local professionals to capture your trip. Through our platform, you'll be able to select your destination, browse photographer portfolios, check photographers' availability, message them on the go, and book any professional photographer in 363 cities across 92 countries. You'll then get to experience the city with your photographer, who is also your local guide. He will give you tips on the destination and show you the hidden gems. You'll receive your photos ready to print in 24 hours to post online and share with your friends and family. We're creating a new market opportunity, and our current market overlaps the photography and the $106 billion leisure tours industry in the US alone. We take 35% of every booking, an average of $98 per booking. It costs us $16 to acquire a customer, and with just one press feature, we are able to receive over 3,000 photographer applications. And people love us. We've been able to aggregate over 500 reviews and recommendations just in the past months. For the year 2017, we did $160,000 in revenue. This year, we've grown 200% over last, and we have projected revenues of $500,000. We've been growing steadily, 20% month over month since January this year. And with our first email campaign sent out for Cyber Monday, we hit record sales, selling 90 bookings in 24 hours. That's 1,400% over what we sell daily. What we proved and learned is that people love our product, that we have a great price elasticity, and that gift cards are a huge opportunity for scaling. We're now focused on scaling the business, and to do so, we want to create partnerships with key players in the industry. In travel, with OTAs, offer our service with hotel concierge, brand rewards program, as well as overlap with other industries like the honeymoon, wedding registry, and engagements. We've now closed our first partnership with the best airport in the world, Changi Singapore Airport, to offer our service through their concierge, Changi Recommends. My name is Valerie. We are Shoot My Travel, capturing your memories anywhere you go.
Okay, well done.
For our weekly metric, we are up 25% over the 2 previous weeks. We changed our ad roles from static images to GIFs and small videos, and that really boosts our sales.
An amazing learning. Moving images work better than non-moving images. Fantastic. Let's take feedback from our judges.
This is so cool, and honestly, I wish I had this in my most recent trip. So I think the one fear I would naively have going into this is that this is a feature of what something a tour operator would actually offer as a upsell opportunity. So would love to hear how you think about how tour operators think about this and whether this is complementary or competitive with them.
Maybe talk a little bit about the demographics that you believe you focus on. When I think of my own experience, it would be, I would be surprised if it was attractive to me. However, there's a young partner in our office that when she got engaged, made sure, they spun up a photographer to take pictures of that for her so she'd have those Instagrammable moments. So it seemed perfectly suited to her. Yet my daughter insists on taking selfies. She won't let me take her picture. She wants to do it. There's something about the selfie that, appeals. So maybe a little bit of where you've seen the sweet spot by age and gender.
Yeah, super great presentation. Thanks for that. Yeah, my question is, how does that, because I could imagine that there's actually a spread where certain kinds of customers, let's say somebody who's going for a honeymoon, I just had a friend who went for a honeymoon, and I noticed that they had, I don't know if they were using you, but clearly based on the photos on Facebook, contracted with a professional photographer, unless my friend's a better photographer than I thought he was. And I wonder if there are these high value, moments where you can really kind of charge more, and what exactly is the segment that you should focus on, because people take trips for various reasons.
Yeah, I'll echo that. I sort of went through a journey from, well, I'm not sure this would work, to thinking this would be really cool to use and to have. I think my question would be, a lot of travel services can be pretty viral over time in their growth, and I'd love to understand, how often, maybe you don't have this data yet, but how often you've seen repeat use by customers, and then secondly, are you seeing evidence of interesting viral effects where people are recommending the service, and or are you thinking of ways to sort of productize that and include that in the product feature set?
2 minutes.
Thank you for your questions. Asad, I will start with you. How many times do people use our service? We're seeing 2.5 times a year. So we'll use it summer and December, and then they'll gift it to somebody else for a honeymoon gift or wedding gift. So it's a great opportunity to explore that. Virality, we see a lot of virality, especially on our Facebook page. People just going there and organically recommending the service, and we're getting a lot of referrals. More than 50% of our bookings actually come through referrals and friends using it and posting it online. Jiri, value moments and charge for the occasions. We see a lot of occasional travelers, but we also see a lot of leisure travelers. So we were surprised that 25% of our customers are actually solo travelers that are traveling for leisure. So that's a great opportunity for us to tap into. And with the growth of influencers now needing more content, we're the perfect solution for them anywhere in the world. Ben, demographics, we're mainly targeting women 25 to 35, so that's our 60% demographic. Then we have 40% males that are booking it for surprise proposals, and they also want to be the Instagram. They hire us because they want to hire the Instagram husband for hire versus them being the Instagram husband themselves. And Connor, feature of competitors upselling or using this service. I would say none of the tour operators are actually laser focused in this space. Managing photographers and a good database and community of photographers is not as easy as you would think. So they're not laser focused. We see them as partners and possible partnerships to grow and scale the business. Thank you.
Okay, well done. Next up is Posty. We brought our team down to Sydney last year. I think, Ben, you came with us. We had a couple of good meals. And we found 3 startups that we've invested in from Australia. We'll be going back to Sydney in June. Hopefully we find 3 more. 3 minutes on the clock for Posty in 3, 2, go.
Hey everyone, I'm Pete, and we're networking brands to build the next big ad platform. So for the last 3 years, we've seen an explosion in micro brands. These are anyone who has a product, a proprietary website, and that markets themselves through social channels. And this is exploding for 3 major reasons: the changing face of employment, the desire to buy locally, and tech is making it a lot easier to sell online. This is Emma. She runs a brand called Happy Hands, Happy Heart that makes natural Play-Doh. Emma uses really great content to build frighteningly strong relationships with her customers who love her. She wants to find more customers, but she struggles with how to use Facebook advertising and Google advertising because of the time and complexity involved. We help Emma through our peer-to-peer advertising platform, where brands become the media owners, and we help them find customers who shop with brands like theirs. Let me show you how it works. So brands can find their most popular social content and can create ads in seconds. Those ads are then listed in a marketplace, and Emma can go and browse prospective hosts who might host and share their content with their followers. Emma's also a host herself, and she can browse ads that she might want to place in her own email campaigns. When she finds one she likes, she can apply in 2 clicks. So when both parties agree, an advertiser's content is placed inside the host email campaign. The host gets directly paid by the advertiser, and the advertiser reaches customers who shop with brands like theirs. So we're seeing lots of different types of advertising in the platform, including big brand dollars that are starting to flow in. And one thing we found that's cool is that when a brand gets paid to host some content, they then reinvest that money for their own advertising, and we project will take more than 60% of all spend through commissions. We also make it really easy for Emma to build and send email campaigns so that we have lots of stock of emails and that she can go and get the value out of this herself. So we pre-build the campaigns using her most popular social content, and then she can go in and change colors, stylings, fonts, everything she wants in just a few clicks and just a few minutes. So it takes Emma now 5 minutes to create an email campaign. They drive traffic for her, and email's gone from a cost center to a revenue center. So we have we're growing, and we have a good core of brands that love what we do. Our vision is that we want brands like Emma to focus on creating and sharing great content. We'll then take that content to engage her current customers and to help her engage other people's customers. And ultimately, we then want to help her find new customers through automated shopping listings on Google Shopping, Amazon, Etsy, etc. We're essentially aggregating databases and rewarding brands as the new media currency. There's really strong network effects in what we're doing. So our view is that we will take some time to work out the unit economics, build a really great aggregated audience, and then in a couple of years build up to a really strong aggregated audience, which at that point will be worth about $21 million ARR. So for the last 7 years, I built and sold a digital marketing agency. I've spent millions of dollars of brand marketing money, so I know the space really well. I've got a great team working with me on Posty, including Sasha, who was a lead growth marketer at Canva, who we just added into the team as our CMO. I'm Pete, this is Posty, and we're networking brands to build the next big ad platform.
Okay, well done. Questions from our judges?
Sorry, 2 metrics we're tracking.
Oh yeah, the metrics, sorry.
NPS to see what people really think of us. So we're at a 30-day NPS of 74, which we're really proud of. And we're tracking MRR plotted weekly. And yeah, CAC LTV. And churn was 0.9% in November.
Awesome. Super impressive traction so far. I think, in particular, the network effects that you pointed out and the fact that commissions are being recycled on the platform is really promising. I would love some additional color on what you would view as a sort of ideal customer profile. I noticed a mix of sort of larger brands and then what I imagine are smaller influencers on there. But whether that's sort of, by how much volume they do, how much followers they have, however you keep track of that, just getting a sense of that would be helpful.
Yeah, super interesting. This is Yuri from Yes VC. My question is, are you focused exclusively on email campaigns, or are you also considering other channels?
First, kudos for putting up the team. I think you and Tonebase might be the only two that put the team up, and I'm used to seeing that pretty early in to get an understanding of a business. I was going to ask about email versus other, because that wasn't entirely clear how one executes here. And explicitly, your example that you put on the screen was Lululemon and Happy Hearts, Happy Hands thingy. Is that a live example, and how would that work? Is Lululemon promoting healthy Play-Doh, and why?
So congrats, awesome growth and awesome metrics. I think the one metric that I would have loved to see and maybe get some color on is, the one metric that I think will matter is what is ROI for the advertisers. This feels like we're trending towards, taking this to the logical extreme. Our inboxes will, be full of products that are actually gateways into, 7 other products. And so I think we'd love to hear, our advertisers seeing, real ROI.
Alrighty, I'll address the more fundamental question of how this actually works. So Lululemon is an advertiser on the platform. We didn't expect them to come in as soon as they have, but essentially brands that are listing themselves as hosts are the ones that we want to build this network around. So the idea is that brand says, I have a database of 1,000 to 20,000 people on my database, and I want to make them available as media that these other brands can advertise to. So Lululemon is essentially paying Happy Hands, Happy Heart for Lululemon to put their content into Happy Hands, Happy Heart's email campaign, and it comes with a nice message in there, so it feels like it's coming from Happy Hands, Happy Heart. Is it just email? Yes, at the moment we're thinking just email. We also see a larger opportunity to go and pull this into a broader social influencer kind of space as well, but this is relevant for influencers and brands. We specifically think that brands are going to be the new place where these relationships are most valuably held. Aside, you mentioned ideal customer profile. So yeah, influencers for us is definitely interesting, but really we want to try to find these brands because I think these are the ones that are changing how brand marketing works because of their ability to build really, really strong connections through their social content. The biggest question for me is the metric ROI. So we're pretty early in this. We've been live literally 4 weeks on top of the email platform that we've had rolling for a year and a half. So we don't have a deep understanding of exactly what everything looks like costing. We think it's landing around about $2.50 a click right now, but there's cases where it's going a lot better and cases where it's more expensive. So I think we can iterate on that and improve that over time. Thank you so much. I'm Pete. This is Posty, and we're networking brands to build the next big ad platform.
Okay, well done. Next up is Takeoffs.io, also from Down Under. 3 minutes on the clock. Are you ready, Chris?
Yep.
3, 2, go.
Hi, I'm Chris O'Halloran from Takeoffs.io, and we're automating construction takeoffs and estimates. This is Carl. He's a general contractor. He'd love to quote around 5 to 10 projects every month, but like most contractors, he's quite time poor, as about 80% of his time is spent on site. Now, Carl's just been given a new set of blueprints to quote, and before he can do that, he needs to do a full material takeoff. So he needs to understand how much bricks are in the job, how much painting surfaces there are, lumber, etc. A whole house like this would take Carl, on average, around 2 to 4 weeks to complete. With Takeoffs.io, he simply uploads those plans using a drag and drop, tells us a bit about the type of takeoff he needs, in this case, floor tiling, and then in real time, our system goes through, looks at all the pages that have been uploaded, and finds relevant drawings for the type of takeoff he needs. In this case, a floor plan, and then within seconds we can show Carl exactly where all the floor tiles are in those blueprints. We can also show Carl a full bill of materials of everything he needs to build the job and what the costs have been in his area for the last quarter. Our traction today has been completely bootstrapped. We've done over 450 takeoffs since launching in March last year and $180,000 annualised revenue run rate. We have a pay-per-use model. It costs us $167 to acquire a customer, and the first order is on average $900. Takeoffs right now is we're laser focused on the general contractor and the residential construction market. We see that being about a $1.5 billion industry. We have plans to connect then from the bill of material right through to building materials, allowing a builder to one click and order materials from his bill of quantities, and that opens up another $51 billion market. We also plan to go downscale and integrate with other products in the value chain, such as Procore, Building Connected, and the like. And we also have plans to do a consumer product at the front end. Competitors will fall into two key categories. On-screen takeoff tools, which are really a digital replacement for the old scale ruler and highlighter, and outsourced service providers like quantity surveying firms and estimating shops. At Takeoffs.io, we're taking a completely technology-first approach, and we're using computer vision and artificial intelligence to extract the information in real time. Our nearest competitor is a company called Creo. They're actually using AI in BIM models only, and they're based out of the UK. Now, the reason we're going to win is because the industry is on a PDF standard, and BIM hasn't really gotten traction. The team consists of myself. I'm a licensed builder. I've actually built over 200 homes. I've spent the last 15 years running technology projects. Tech team consists of Gilly and Vitali. They both hold a master's in computer science, and Gilly's actually got a second master's in computer vision and artificial intelligence. I'm Chris O'Halloran from Takeoffs.io, and we're automating construction takeoffs and estimates.
Okay, well done. Tell us about the metrics you're tracking during the accelerator.
Sure. So we're tracking weekly revenue and the number of takeoffs each week.
Great. Questions from our judges?
Awesome. I'm super interested in this space. I think the scary thing about the space is it's super seasonal. And so, other software companies targeting the space have been sure to put in subscription models to smooth that out. Would love to hear a little bit of your thinking around why the per use model makes more sense.
So I also like this category. I spent a whole bunch of time, about 6 months, looking at one of the companies you mentioned on that slide. I know the founder of another. Just a thing for you to consider. I spent all that time, but when you said takeoffs, I didn't know what that meant. So I think that's a pretty industry-specific term, and I don't know if it's the same one used here. I could easily be wrong, but your knowledge is sort of absolute. Remember, a lot of the investors you're going to pitch don't have that. But as soon as you get into the bill of materials, my ears perk up. You explained what it was pretty quickly, but that's where I'd want to understand how you think. As you move from the contractor, and whether it's the general or the sub, I want to understand as well. When you move from that to actually procurement, how you think about that. Because my understanding is that the people that spec it are not the people that procure. So how do you jump over that bridge to get to the folks that are buying the acoustical soling plant panels for the ceiling or whatever it is that they care about?
Hi, Yuri from YesVC. Actually, Ben just asked my question, which was about this procurement part of this. It seemed like a larger market that ultimately was in your focus. On a high level, I would say, you presented a strategy that actually had you kind of diversifying out in multiple directions. And, intuitively, I think as an investor, you like the idea of a startup doubling down on what they feel like is the most lucrative and, the part of their business that's getting the most traction. And, this felt to me a little bit like, maybe it was just the way it was presented now, but as if you were diversifying out from what was your original focus. And so I was just looking for a little bit of a crisper, account of, is this a change in strategy, or is it you really just kind of honing in and becoming more precise at addressing the particular market need that you think is the most lucrative one?
I agree. Super interesting space. Feels like there's a lot of opportunity here. My immediate question was the same one that I think Connor stated, which was why pay-per-use for subscription, and then what does that mean for the incentive to actually use the software over time? I'd love to understand too the state of the technology. Obviously, in the ideal example, it sounds like it's fully automated, but where does it fall short today? And is there any manual work left for the contractor to do?
Okay, great. So business model, Connor, the builders like to pay operationally, so they like to capitalise the cost against a project, and they're happy to pay more, so they pay up to $2,000 for a takeoff if they can capitalise against a project. A number of them also charge that to their client, so they're actually making a profit out of that just on the takeoff side alone. We are exploring options to do subscription-based revenue to help with seasonality. We are coming into seasonality now in December. It's going to quieten off, and we expect it will probably be a blend of monthly subscription and then buying a number of takeoffs. The difficult thing is a lot of contractors will ramp up and down and that's very difficult for them to predict their workload, so it needs to be flexible to suit them. But we are exploring those options at the moment. Ben, in terms of the general contractors versus subs, we initially went out targeting general contractors. What we realised was that subcontractors needed it as well, and in fact most general contractors will bring in their subs and invite them into the platform. So typically what happens is a general contractor will do an initial takeoff, which will be a high level. He'll send it to a quote for his client, enable him to do a feasibility costing, and then when he wins the work, he'll need to do a takeoff again, and then also his subs will have to do a takeoff. So it's a kind of problem that's just repeated throughout the life cycle early in the building process. In terms of takeoff as an industry term, yes, it is an industry term, and it's similar here to what is in Australia. Those in the industry know what a takeoff is. A material takeoff is done. Most investors tend to not know that word, and that question comes up probably more than any. Is that a relevant term for the space we're in? Yuri, the too broad around in terms of the product. When we initially launched, it was around takeoff specifically. What we learned is that builders need a takeoff at the front end and also then to order their materials. So they're wanting us to give them a takeoff in a different format, which is a material order list. So being able then to one-click order the materials is a logical next step. Sarge, sorry, I'll catch up with you after the break.
Well done. Let's welcome AMHC. We'll put 3 minutes on the clock. Are you ready, Ali? Got that microphone. Okay. Oh. Okay. Don't worry. Okay. You ready?
Yes.
Okay, 3 minutes on the clock in 3, 2, go.
Hello, my name is Ali, and I'm the co-founder of AMHC Fine Jewelry. What Warby Parker, Dollar Shave Club, and Bonobos have done to their industries, we plan on taking on the fine jewelry industry. We are a direct-to-consumer fine jewelry brand that is changing the way that women purchase fine jewelry for themselves. We've been very innovative about our designs, such as our bucket collection. It's had a total revenue of nearly $60,000. We're also very innovative when it comes to our in-house content creation that speaks to women. We target the female self-purchaser, which will turn into a $120 billion industry by 2025. You may think that solid gold jewelry is a once-in-a-blue-moon purchase, but that's not true for our customers. They'll buy this ring in January for $330, and by the end of the year, they'll complete the purchase and have a total, complete the ring stack for a total value of $800 in jewelry. Here are real examples of our customers. This is Samantha. She's placed 9 orders in the past year. This is Victoria, and she's placed 6 orders, giving us a total revenue of nearly $7,000 in the last year. And both women are examples of how we use our jewelry designs and content to turn a one-time purchase into multiple purchases. Our customers love us so much, we have an ongoing 35% repeat customer rate. AMHC Fine Jewelry currently consists of 2 jewelry brands. We have our mass market brand called Amarillo, which is a $220 average order value, and Hottie Chai is our premium brand with an average order value of $500. We've been very innovative about how we market. We use social influencers. This is Jen Im, and she absolutely loves our products. She's actually worn our products several times, giving us a total revenue of nearly $180,000 for this choker alone. Jen is an example of a celebrity influencer, but we also use micro-influencers. This year alone, we've used 50 micro-influencers, which accounted for 20% of our yearly revenue. We have been bootstrapped to date with nearly $3 million in sales, and we plan on taking advantage of social influencers, which has helped us get to this point today. We have a growing audience of nearly 300,000, and we take advantage of this direct connection to our consumers in everything that we do, including our manufacturing. We have a 2-week turnaround time from concept to production to manufacturing, all done within Los Angeles, versus the industry average of 4 to 6 months. That means when it comes to our designs, we're faster than the industry average. And we have a 70% gross profit margin. To date, we've hit $561,000, and we're on track to hit $600,000 for the whole year. My name is Allie, and I am the co-founder of AMHC Fine Jewelry, and we're changing the way that women buy solid gold jewelry online. Thank you.
Okay, well done. What metric are you tracking during the accelerator?
We're tracking revenue. So this week we've hit $18,600 in sales, which is over our $15,000 plan.
Okay, well done, exceeding expectations. Let's take questions from our judges.
Awesome. Well, congratulations on all the early progress, and sounds like you've seen a fair bit of loyalty as well amongst the early customers, which is awesome to see. I'd love to hear just a bit more additional color on customer acquisition. I mean, I know you mentioned influencers, and it feels like in some cases that it's becoming harder, and in some cases more expensive to market to using that channel. And so just some additional color on what you're finding there and how you plan to grow that would be helpful.
Hey, this is Yuri from Yes VC. Yeah, really impressive. I have one question that's related to this CAC and the influencers is what we've seen in some of the other companies in similar spaces, that there are oftentimes 1 or 2 influencers that really over deliver, but they kind of have their curve as well. And some companies have had pretty dramatic reductions in revenue when those influencers are no longer popular or shift over to work with other brands. The second is, I'm just curious about the competition in the space and how you differentiate relative to there's a bunch of other jewelry startups that are applying a similar influencer strategy. So just a little bit more color on how you see that game play out would be interesting.
Impressive to get to $3 million in revenue on an entirely bootstrapped business. I guess some nuts and bolts questions. How long have you been doing this? Because if you're doing $600,000 this year and you've reached $3 million, and assuming the first year was not the strongest, it sounds like you might have been in it for a long time. Secondly, you mentioned gold and all the illustrations were of gold. Is that the only material you work in, or do you do semi-precious stones? Do you do silver? And then the third would be demographics. I'm getting a feeling from the influencer shots you showed me that this is trending towards younger women, but I don't know that to be the fact because jewelry is somewhat age agnostic.
Yeah, congrats on the progress to date. I think one of the reasons we've always been hesitant to jump into the D2C space is the long-term defensibility. You can build an amazing brand with a great launch. Ultimately, people are jumping at you in a couple of years. So maybe give us a sense of where the brand's going and how you stay ahead of inevitable competitors.
Hello. Okay. Thank you. Those are really great questions. You, Yuri and Assad, you guys have very similar questions. To give you hindsight, my business partner and I are actually also social influencers. So we actually have a background of over 7 years within the space. So it's very easy for us to know which one will have the most action, which one has the most traction, and we really have it. We really have it down to the point to know which influencer will give us the highest ROI based on delivery when we test them beforehand. Based on our acquisition costs for our customers, $38, and our lifetime value is about $1,200. For our design, something that differentiates us, Yuri, is that all of our designs are done in-house. To give you a scope on the current jewelry market, 90% of the jewelry industry is white label. That means there's no room for innovation, and that's really how we differentiate ourselves on the design side. Ben, we have been, like I said before, we have been in the industry for over 7 years. Between my partner and 7 years our business has been existing for over 7 years. My business partner and I have over 20 years within the jewelry industry, so we have a full scope on how the industry works. We do work heavily with gold. We have historically worked with materials other than gold, but based on what women need and want, they want solid gold jewelry that they don't have to worry about. Our company exists because there wasn't a fine jewelry line that existed for us. When we started buying jewelry for ourselves, there was only gold plate at Forever 21, or there's very expensive high-end Tiffany jewelry, and there really wasn't an area for AMHC, which is why we exist today. Connor, I would love to connect with you after. Thank you.
Okay, well done. All the companies are presenting in a random order, so don't read into the order. After this final presentation, our seventh, I'm going to ask the judges in the front row to give me their number 3, their number 2, and their number 1 startup. So start thinking about that if you're in the front row. Okay, are you ready? 3, 2, go.
Hey, I'm James, co-founder and CEO of Tori, and this is Christina. Christina has a good job at a tech company in Boston. She's been saving up for the past few years, so she's ready to buy her first home. She's heard horror stories about unhelpful real estate agents who still get paid thousands of dollars in commission. She thinks to herself, there must be a better way to buy a home, and she finds Tori. On the Tori website, she's instantly connected with a licensed expert who helps onboard her and get her started. And then in the Tori app, she uses our machine learning powered search to easily find a home that she likes and then schedules a showing to see it. After that, in just a few easy steps, she submits an offer to buy that home, being provided with algorithmic data along the way to make sure that her offer is as competitive as possible. Her documents are all generated automatically. Conversational AI handles all of her negotiation and back and forth, and her inspection, appraisal, payments, and progress updates all happen seamlessly throughout. As soon as her offer is accepted, she also gets set up with an attorney, inspector, appraiser, and title insurance, all free of charge. Tori makes money by acting as a buyer's agent, but we use part of the 2 to 3% commission that we're paid to streamline the service and pay for a buyer's closing costs for them, making it much easier. Our average commission on a sale so far is about $16,400. It costs us about $600 to acquire a customer, and then after paying their closing costs, we net about $9,000 per sale. We get people interested by a mix of great content and branding, digital spend, and SEO, and then we convert them into a sign-up with our innovative search and our proprietary data-driven tools that we provide. We do a quick qualifying call with somebody where we gauge their interest in Tori and their financial readiness, and then once we've gotten someone that far, we see about an 80% conversion to an actual sale. This is actually Christina, and she's just one of the many people who have already bought homes with Tori and loved it. In just our first 5 months selling homes, we reached a $500,000 annualized run rate in Massachusetts alone, and we have dozens more people buying with us right now. Now, our long-term vision is to own the entire home life cycle. We started by building the easiest way to actually transact on a home. Moving forward, we're using AI to totally change the way that people find their homes. Eventually, we'll broker your mortgage so you don't have to leave the app from pre-approval all the way through close. Moving is going to be as easy as clicking a button when we know when and what you need, and then we'll be able to use that data we've learned about you along the way to target you with products and services for your home. Now, we are laser focused on the transaction, but we think this long-term strategy will help build a competitive moat around what we're creating. Our team has extensive experience across consumer product and engineering, design, real estate, and digital marketing. Real estate tech finance is happening at record levels. You have companies like Open Door solving the sell side of the transaction and Compass achieving scale through consolidation. Nobody's going after the buy side of the transaction with advanced technology and a streamlined approach like Tori is. We're fundamentally changing the way that people buy their homes. I'm James, co-founder and CEO of Tori, the easiest way to buy a home.
Okay, well done. Share with us, if you will, the metric you're tracking during your time in the accelerator.
Sure. So I mentioned our qualifying process. So the primary thing that we're tracking throughout the accelerator is that number of qualified buyers. These are people that have actively told us that I'm going to buy my home with you. Obviously, it's a long pipeline. There's a long tail on that. And then above that, you can see the actual sales that we've closed so far. So this past week was our best week in the accelerator so far. We've really been working hard on refining that funnel.
Up and to the right is something we like. Okay, questions from our judges.
Congrats, and I think this this sort of graph is kind of rare, just because this is a super seasonal industry, as you know. Yeah, I think this is the holy grail for this product. It's super hard because you've got to bring in a bunch of supply and a bunch of other stakeholders. So we'd love to hear how you're pulling people away from the countless other platforms they could sell on.
We're investors in Open Door, and this almost feels like the exact other side of the coin, so that makes sense to me. What I'm not sure I understood, though, is are you expecting the consumer to do all of this transaction online, and you're going to use the machine learning to figure out the right home for them, and you're not expecting them to visit it? Or if they are visiting in the physical world, how do you then intercept that process so that they don't disintermediate themselves from the process with you once they get to the house and meet the broker that's selling it?
I'm really blown away by the presentation. Thanks, James. That was awesome. This is Yuri from SVC. Again, this is an extremely fraught and complicated process. You know, buying a home is, you know, the largest investment most of us will ever make in their lives. And I'm curious what the key drop-offs, roadblocks, what are you seeing right now as the biggest hurdle for a customer going through this journey where they struggle or drop out?
I guess I'll join the pack. Yeah, this is great to see. Looks like you guys have made a ton of awesome progress. I'd be curious to know what expansion looks like. I imagine from your comment around Massachusetts that it's geo-gated, but both in terms of process and cost, what does that look like as you grow and scale?
Great question. Thanks, guys. So I'll start with you. Expansion. The way we think about it is tier 2 cities. We started a company in Boston. We moved here this summer. So we feel like this is where we need to be located long term. We'll be looking at tier 2 cities, places like Denver, Austin, Atlanta, Philadelphia. The way we're going to do that is launch some of the search and data products first to start evaluating which markets will be most profitable. Referral business is great in real estate, so you can usually get 20% commission referral. So we'll probably launch a product that looks something like that. We've already built a lot of that, but then to evaluate which markets that full product, the full brokerage product makes sense in. So that's how we'll look at that. Then moving backwards, we're not a marketplace, so we actually don't need any supply. So you can buy any home that's on the market with Tori. So we just source everything from the MLS. Does that actually answer your question? Great. And all online? Effectively, yes, except for the fact that we do expect that people are still going to see the home. So we have clients that work with us and they schedule showings with us, and that we'll actually, if they want, we'll go with them. But as long as they've engaged with us so that then when they're going to that home, they can tell the person, yes, I'm working with a buyer's agent, then we haven't had any pushback. Listing agents actually really liked us, and just because we make their job easier as well. And then biggest drop-off, I think for a lot of our, the reason this pipeline is probably, it's not more on the pink, I just think, it takes time to find a home. So I think that that's not where we've been focused. I kind of mentioned that long tail for where we're thinking about. We have some really interesting tools that help with that, but I think that as we get better about helping somebody find the right home faster, this is going to tighten up and that lead time becomes shorter. I'm happy to answer any other questions offline. Thanks, guys.
Okay. Well done. Got to see 7 great startups. And now comes the moment of truth. I'll ask you for your number 3, your number 2. Demont will keep score. So just start with your number 3 and your number 2. Third place, half a point. Second place, full point. And first place is the money ball, 2 points. Assad, do you want to go first? Who's your number 3 and your number 2?
I'll have to go Takeoff's number 3 and Posty for number 2.
Great. The boys from down under cleaning up. Okay. Yuri.
Mine's number 3, AMHC. Number 2, Tonebase.
Great. AMHC and Tonebase. Well done.
Number 3, AMHC, and number 2, Toriel, or however you say it, since they just
Tori.
presented. Right, I should know that since they literally just pitched.
My number 3 is Tonebase. Number 2 is AMHC.
Okay, well done. And now, who's your number 1 and why? Oh, Demont, what's the scores?
AMHC's in first place with 2 points, Tonebase in second with 1.5, and Posty and Tori tied for third with 1.
Okay, it's a tight race. Connor, tell us, who did you pick as number 1 and why? You can expand upon this answer.
Yeah, my number 1 was Takeoffs. Takeoffs is operating in one of the most offline spaces there is, and there are good reasons for that. But we view this as obviously blue whale market, where lots of stakeholders. None of those stakeholders are interacted in any kind of online way. They're construction procurement's one of the biggest industries there is. It's entirely offline right now, and again, there are good reasons for that. But I think we haven't seen compelling swing to do this in a while, so I'm super excited about it.
Great. Okay, Ben, who's your number one and why?
Perhaps not surprising, it's also Takeoffs for the same reasons. I think this is the company that stands out to me as one that I would, while I couldn't fund them today, would very much want to look at what the A looks like. Did spend a lot of time in this category. The only thing I would add to the point is I think that this market is incredibly antiquated. However, over the last 2 years has just started to tip into software technology. Procore down in Monterey or wherever they are down there has really grown a business into an overnight success, and it only took them 17 years. So I think there's an enormous amount to be made here. The people need it. There's value up and down the chain. Literally everybody in the constituency group makes sense. I will mention you consciously did not answer the question I cared about the most, which was how you move over to procurement, because that's the reason I didn't do one of the other companies in that stack, and being able to get a piece of the action on those transactions is going to be critical.
Awesome. Yuri.
Yeah, my number one is Tori. I think that this is one of those, definitely not blue ocean space, red ocean space. But the thing is, the incredible value here is evident, and nobody's really cracked this from buyer's side. It's been kind of stale for a while. There's a bunch of these apps that we've looked at, but I actually, felt that this one had something that could even turn into a bigger business than perhaps is what they're conceiving of right now, just in terms of being able to do all kinds of stuff post-purchase. So yeah, really interested in it.
Saad.
I don't know if there's a correlation here, but I had the most questions about my number one, which is Tori, for a lot of the reasons that you said. And I think one of the things in particular that appeals to me is the thoughtful strategy on expansion and starting with what is a data play essentially, and only expanding it to full service in that geo if it makes sense. So I think you guys are set up for something really exciting.
Okay, so tell us scores and votes. I'm curious.
Third place was AMHC, 3 votes, 2 points. Second place was Takeoffs with 4.5 points, also with 3 votes. And Tori winning today with 5 points and 3 votes as well.
Great. Let's give it up for our judges. We're going to take a 15, 20-minute break, have some food, and then we'll get back together. And who's speaking today?
Mr. Copiantis.
Oh, it's going to be great. So I'm going to be doing office hours, which means we have 3 startups with their hardest question. 4 are going to tell me what's the thing they're struggling most with in their business, and we're going to sit and brainstorm it, laptops out, taking notes as a group, and then anybody else with questions can go on the end, time providing. Okay. Please meet the founders. Thanks, guys. Thanks, judges.